reason why firms and individuals are going to either get stronger and better or busier and fall further behind is not because they lack effort, but it's because they misread what is actually changing. Because this year is not about tools, it's not about platforms, it's not even about AI, it's about direction. In 2026, we're going to move fully into the co-pilot era and insert your own GPT. By the end of this year, 2026, the mid-market particularly is going to be dominated by three structures. First is the PE-backed super firms. The second kind of the specialist firms. The third structure we're seeing is more federated networks, these conglomerations. They're pooling AI, they're pooling back office resources, they're pooling data investment, but they're keeping local ownership. The accounting profession is splitting in 2026. I'm asking you here on the Accounting Voices podcast, which side are you going to be on? And we know that AI, ownership, talent, trust are all pulling firms in different directions, private equity, a whole lot of merging and acquiring. This year is going to decide who leads and who fades. The accounting profession is not easing into 2026. It's accelerating into it on the back of one of the most disruptive years in its history. And whether leaders like it or not, this is going to be a sorting year. I'm thinking of the sorting hat in Harry Potter. You all know what I mean. Some firms are going to come out of 2026 clearer, stronger, more valuable. Others are going to be busier than ever and quietly falling behind. And that's not just firms, it's individuals as well, whether you're in industry, in practice, whatever you're doing in the accounting and finance world. This is the Accounting Voices show where we give you the news and the updates on what's relevant to help you stay in the game and stay informed and stay in charge of your own career. And the reason why firms and individuals are going to either get stronger and better or busier and fall further behind is not because they lack effort, but it's because they misread what is actually changing. Because this year is not about tools, it's not about platforms, it's not even about AI, it's about direction. So I'm going to give you some disruptors, some of the big wheels that are turning so that you can get ahead of them. I'm going to talk you through them one by one because the profession's splitting into four fault lines from what I can see. And I look at all the trends and I speak to a lot of influencers and experts out there. So let's go through these and you need to decide how you're going to interpret what is happening and stay relevant and stay informed. So number one is AI adoption. We can't get around it. Obviously, it's no longer optional, but adoption is not going to be even. And this is the point. Some firms are rapidly accelerating in this area, even faster than they can keep up with themselves. But what we're seeing is in 2026, we're going to move fully into the co-pilot era and insert your own GPT, large language learning model there, but AI is handling the bulk of routine work. We can't get around that now. The reconciliations, the reporting, the compliance checks, the data preparation, all of the grunt work, that's already happening. That is a done deal. The real question is what firms do with the space that creates, even in your own workload, your own workflows. You're using GPTs and Claudes and Groks and Geminis and Copilots and everything else to do a lot of the creative work, a lot of the automated work, a lot of the low-level work. So what is that going to do to your calendar? 50% of the work is taken up by AI and automation now. What is that freeing you up to do? So the real question is, what are you doing with the space that this creates, both as a firm and as an individual? And what we know is that some firms are using AI to scale human judgment. They're investing in the interpretation side, the scenario thinking, the ethics, the advisory competence and confidence. And that is a great way to go. And these firms are doing it, right, because they're training people not just to handle the numbers and do the large language learning models and the AI, but to explain the numbers and tell the stories behind the numbers. So it goes beyond mere production of reports. Other firms seem to be bolting AI into old workflows and old legacy software, and they're hoping that efficiency is enough. It won't be. So this is creating a widening gap between the haves and the have-nots, between the goods and the greats. And I guess one group in terms of AI is those AI native firms that are redesigning how the work gets done, and they're moving very rapidly. They're very agile. The second group is AI assisted firms, not AI native, but AI assisted. And they're going to automate tasks, but they're going to change very little else. So they're still going to be relying on the same kinds of work to come in. So one group is building margin and clarity and strategy. The other is staying busy and confused. You could put that into two types of accountants. One's building good strategies and processes and workflows and integrations. The other is just staying busy and confused and waiting for the next thing to happen. The second fault line is client expectations. We know that what clients thought was good yesterday is just average today. What clients thought was great yesterday is good today. Yesterday's great is tomorrow's average. And clients are not just waiting for firms to catch up. If you are not moving as fast as they are and showing them what the future is looking like for them, their company, their industry, you're going to fall behind to accounting firms that will. And it might not even be accounting firms. It might be consulting firms that just bring an element of compliance and signing off on the accounts. The clients are looking for integrated digital ecosystems. They want to know, A, that you're using AI, and B, what you're using AI for. Particularly the bigger clients, they want real-time insight. They want it now. They want dashboards that answer questions before meetings are booked. They want that future-focused accounting advisor. The smaller clients, they want humans. Obviously, they want relationship, but they also want speed. They want clarity. They want confidence. And this is creating a two-speed market. And if your firm tries to serve both markets in the same way, you're going to fail with both because you've got to pick your lane here. The firms that win in 2026 are going to be explicit about two things. One is who they serve, and two is how they serve them. So this is not aspirational. This is operational. And you've got to see this fault line around client expectations, who you're going to serve, what you're going to do for them, and how are you going to do it. And that's got to imbue everything in your marketing, in your corporate branding, in all the thought leadership that you put out, and the way you go to market, and the way you interact with your clients. The third fault line is leadership and succession. We can't get away from talent. We can't get away from the labor market changing and the outsourcing, offshoring model coming in here. The partnership model is under real strain. The whole equity pyramid, as it's been for billions of years, that's eroded now. The young people don't want to buy into that. They're not rejecting leadership. They're rejecting ownership as it currently exists. So they don't want long buy-ins. They don't want unclear exits. They don't want a promise of a better tomorrow. They don't want lifestyle trade-offs that feel misaligned with their values. They're very value-driven, these younger people. And the firms are responding, from what I can see, in three ways. Some firms are reimagining succession. They've got flatter structures. They're changing the ownership models. They're sharing ownership. They've got a much clearer purpose. Some firms are experiencing an ownership exodus. People are getting out at the top, and few people want that equity. So they've got succession problems. And the third kind of firm I'm seeing are the ones that quietly avoid the issue and hope that time fixes it, or some private equity or bigger firm will come in and buy them up. That's not necessarily going to happen. If your firm is not digitized, if you've not got succession and good people in place, you're going to struggle to get a buyer at the price, the multiple that you want. And mid-tier firms are feeling this the most. A lot of the smaller firms, they serve communities, they serve geographical locations, they serve particular niches, and they will survive. These boutique firms, if you like. One firm I deal with, a guy called Chris Johnson out of San Antonio, Texas. I've been working with him the last year, and he's on an amazing journey. All he does is 401k audits for construction companies, primarily. And he's very clear on what he's doing, and his ownership and his succession is very, very clear. He's employing engineers. He doesn't need accountants. Anyway, I digress. So the mid-tier firms are feeling this the most. They're too big to stay traditional. They're too small to fund the transformation alone and be agile in that regard. And this accelerates the consolidation of private equity question. So you've got to be really clear on this fault line with your succession, your talent, your leadership. What does it look like in a year, 2, 5 years' time? And if people are buying that, what exactly are they buying? The fourth fault line is business and ownership models. By the end of this year, 2026, the mid-market particularly is going to be dominated by three structures. First is the PE-backed super firms. Most of the top 30 in the US, the top 10, top 20 in the UK have taken or are having private equity conversations right now. So these bigger super firms, they're acquisitive, they're offering scale, standardization, reach. They've got a lot of money and resource behind them, and they are going places, and there's a lot of accountability happening in those firms. There's going to be a reckoning, but they are moving fast. The second kind of mid-market firm that's going to be dominated by a certain structure is the specialist firms. They've got tight alliances around niche expertise, industrial expertise, maybe even geographical expertise. They know certain markets very, very well, and they're going to be inoculated with a lot of this if they can maintain that independence and maintain those specialisms. The third structure we're seeing is more federated networks, these conglomerations. They're pooling AI, they're pooling back office resources, they're pooling data investment, but they're keeping local ownership. And the firms that struggle with all of these structures are the ones sitting in the middle without a strategy, without knowing what the next few years are going to look like and where they want to end up. And let's deliver the human factor into this, because AI is going to deliver convenience. The humans are going to deliver confidence. They're going to deliver the competence. They're going to deliver the conversations. So trust has become a premium product, hasn't it? Attention goes where trust goes, and where likability grows, and where personal brand goes. I talk a lot on this show about you building out your network and building out your personal brand so you are in the conversation, you are relevant. When people need what you do, they think of you first. And the role of the accountant is shifting, because trust is a premium product, personal brand is a premium product, attention is premium. In the world of instant data and automated answers, the client still wants someone that understands context, understands risk, understands consequence, can have real conversations with them, future-based conversations. So the role of an accountant is shifting from an expert and a trusted advisor to a navigator, to someone that can chart the future and ask the questions that will be coming up. And this is the opportunity of 2026 as an individual and as a firm. If you want to stay ahead of this game and super relevant and in the conversations, the uncomfortable truth is this, that this year is going to expose firms and individuals that have been delaying decisions and waiting and seeing, these laggards. And it will reward the firms and the people that have clarity, have direction, and there's no ambiguity about them. This year is going to punish ambiguity. It's going to punish vagueness. It's going to be punishing a wait and see attitude. It's going to be punishing old legacy software that is not keeping up to date. It's going to be punishing the firms that don't embrace AI. And the question is not whether change is coming. It's whether your firm, you as a personal brand, have chosen a direction. You've picked a lane. You've got your hands on the steering wheel of your own destiny. And if not, who is actually leading? Who's going to be dictating your future? Who's going to be saying where your firm goes? Is it external forces? Do you want to say in that conversation? This is Accounting Voices. I'm Rob Brown, your host. We're on YouTube. We're on all of the podcast platforms. We are looking for a sponsor for this year as we go into a new show. We've got thousands of followers on our podcast channels and on our YouTube, and we're looking for a sponsor that wants to get alongside our show and is aligned with our brand. So if that's you, reach out to me on LinkedIn, have a conversation. Look, 2026 is not a reset. It's a reckoning. I wish you the very best with everything that you're doing. We'll see you on Accounting Voices on LinkedIn, and we'll see you next week on another episode of Accounting Voices.